Hi, this is Mike Larson for Money and Markets TV. It's getting harder and harder to deny that there's a global economic slowdown happening, and the United States may be next to feel its effects. The current crisis began in Europe, and that's where it's hitting the hardest. In the fourth quarter of last year, the collective economy of the 17-nation Eurozone shrank by 0.3%, the first contraction since 2009. And so far in 2012, things have only gotten worse. A European economic confidence gauge dropped unexpectedly in March. An index of European manufacturing activity slumped for the 8th month in a row, and unemployment jumped to 10.8% in February, the highest it's been since 1997. If we just focus on the PIIGS nations of Portugal, Ireland, Italy, Greece, and Spain, the situation looks even bleaker. Those countries received the lion's share of financial support from the ECB and the fiscal authorities, with promises that all the borrowing and spending would help their fortunes improve. But that's proving to be a pipe dream. Irish retail sales fell 1.9% from a year earlier, the biggest decline in months. Greek bank deposits are plunging at the fastest rate in 11 years as citizens yank money out of institutions they think might fail. Portugal just warned that its economy will shrink by 3.4% this year, more than double the rate of contraction in 2011. And Spain is expecting a 1.7% decline in its GDP this year, while total debt is on track to rise to the highest level since the country became a democracy in 1978. That's Europe, but warning signs are popping up in Asia too. Japan's economy slumped by 0.7% in the fourth quarter, while India's economy grew at the slowest pace in 3 years. And in China, manufacturing activity is shrinking at its fastest rate since 2009, and home prices just suffered the most widespread declines in a year. That brings me to the US, where we continue to see a little bit more of a mixed batch of data. The ISM Manufacturing Index rose slightly in March, but construction spending tanked 1.1% in February. That was the biggest drop in 7 months, and it confirms that all the talk of a huge new housing boom is a bunch of hogwash. Now, when it comes to investing, I continue to like select stocks and asset classes, those that can maintain their recent strength. But I'm also on alert for signs that the massive money-printing rally is running out of steam, and that the global slowdown wave is washing up on our shores. So I've been taking some gains off the table, and I recommend you do too. If I'm right and the US slows further like the rest of the world already is, earnings and stock prices could suffer here too. I'm Mike Larson for Money and Markets TV. Thanks for watching.